Good morning. This is Peter Affronti for Allendale's Morning Wake Up Call for Friday, February 2nd. As of right now, we have March corn up 0.75 cents to 4.48. March beans are up 3.5 cents to 12.06 3/4, and March Chicago wheat is up 6 3/4 cents to 6.08 1/4. So let's get right into it before the weekend. Like I said, today's the second day of February. Corn. Obviously, this week we have seen corn just a slow grind lower. That has been brought back a bit by the index funds buying, resulting in an overall pretty sideways trade for the week. Index funds appeared to be back on the sidelines yesterday. We will see when that commitment to traders report comes out here, if the funds were actually in here selling or they were pairing off some of their short positions, because as we know, they're about 82% of their record shorts right now. And with us being near these 3 years lows, they could start slowing down the selling here. Ethanol was slightly poor this week, while exports were very strong yesterday at 1.351 billion when the top end range was 1.350. So very strong for the corn exports. Now on to the beans. Bean exports. They came in under 200,000 yesterday, well below the lowest estimate. So a very poor export number for the beans. Still, we are seeing our levels above this $12 level. We are seeing support on these $12 level pullbacks here. Now, funds are short about 54% of the record, believing that we did see funds in here shorting the market also this week, pulling it right back. So we've got to look at that commitment to traders report. They can still come in and short some more just because they're not that close to their record. At the same point, this $12 level here has been some decent support. So we'll see if we can see some support there. But one thing that we do need to watch for here is Brazil are still $1 less expensive than U.S. beans right now. So these sales that we want to be seeing, we're not seeing. Unfortunately, this pricing is having an effect on our exports. Wheat. So wild trade yesterday in the overseas wheat market. Yesterday we started drastically lower in overseas wheat, but ended up turning it around by the end of the day, which did end up spilling over to U.S. wheat yesterday. So a nice move, a nice bounce off of those levels. Longer term outlook, even with yesterday's turnaround, the overall trend for overseas wheat is still lower, and we still may see new 3-year lows be made next week, something we need to be watchful for. And then the last market here, cattle. So cash trades are expected to be strong. Yesterday, we did see some coming into $2 to $3 higher. Box beef, choice up 40 cents, select down 92. That packer break even 183.58. So even though we have pulled back off of the $14 level of packer profits, we still are seeing the packers pay up for cattle. So right around that $7 level with packer cushion is what we want to be looking for. That right there is kind of the make and break whether the funds are going to be paying up or they won't, or not the funds. The packers will be paying up and not paying down. So something to watch out for here. But this market did yesterday end up settling above that 100-day moving average, something that we need to keep a watchful eye out for. Watch out for that 200-day moving average coming up right around that 184 level here today also. So if we could see a nice return here today, we could see some higher futures going into the weekend. So if you do have any questions, please feel free to call into 1-800-2-MARKETS. This is Peter Affronti for Allendale's Morning Wake Up Call on Friday, February 2nd. Thank you and have a wonderful and safe weekend.